The mental habits of successful investors. If I asked 100 people what makes a successful investor, most would say intelligence, luck, or finding the next big stock. But after more than 2 decades in the market, I've learned something completely different. Investing isn't primarily a financial game, it's a psychological one. The market rewards people who can control themselves when everyone else is losing theirs. During every bull market, confidence is everywhere. During every crash, fear spreads faster than facts. Yet the investors who consistently build lasting wealth are rarely the ones with the highest IQs. They're the ones who stay calm when emotions run high. They understand delayed gratification, think in decades instead of days, and never let headlines dictate their decisions. One of the most valuable mental habits you can develop is learning to separate noise from signal. Every day, there's another prediction, another breaking news story, another reason to panic or chase excitement. Successful investors ask a different question. Has my long-term thesis actually changed? If the answer is no, they remain patient. They know that compounding doesn't reward activity, it rewards consistency. Your portfolio will often reflect your personality before it reflects the market. If you're impulsive, your investments will be impulsive. If you're disciplined, your wealth will eventually reflect that discipline.
That's exactly what transformed my own investing journey. Early on, I believed success came from making more trades and constantly searching for the perfect opportunity. In reality, I was feeding my emotions instead of growing my portfolio. The turning point came when I stopped trying to predict every market move and started building habits instead. I created simple rules, ignored daily market noise, accepted that being wrong is part of investing, and focused on protecting my capital before chasing returns. Over time, I realized that patience isn't passive, it's an active decision to trust a well-thought-out process. Fear and greed never disappear. Successful investors simply learn not to obey them. They understand that every market correction is temporary, but emotional mistakes can become permanent if you panic. Wealth is rarely built through dramatic moments. It's built quietly through hundreds of disciplined decisions that nobody applauds. That's why the most successful investors don't just study companies, they study themselves. They know their greatest competition isn't the market, it's their own emotions. Master that, and you've already gained an advantage that no stock tip can ever provide.
If this conversation changed the way you think about investing, remember this: the greatest investment you'll ever make isn't in a stock. It's in developing the mindset that allows you to hold great investments through uncertainty.
And if you enjoyed this discussion on the psychology of investing, subscribe for more conversations that go beyond charts and numbers to explore the habits, behaviors, and mental models that create lasting wealth. Until next time, invest wisely, and more importantly, think wisely.